All right. Happy Sunday, everybody. Let me get the stream out there. Got to share the link. You guys should be able to hear what I'm saying. You should be able to see the screen. We got the COT website from Trading Stir. Just gonna go over and get this shared. Hopefully you guys are having a good Sunday. Just a nice quiet week, really. All right. Now I think I got everything done the right way. A little feedback from the chat. You can see the screen, you can hear me talking. We're good to go, and I'll just get it done. Doesn't take very long. All right, we just want to really quickly review where the money went last week. Maybe a quick review on what the COT is for anybody who maybe hasn't really come across this before. It's not just for futures traders. We use this for stocks and options too. Basically anything that you're going to want to trade during the week, because what we're attempting to do here is analyze what the institutions did with their money and then make decisions about where we would want to go next week. You know, do we think they're bullish or bearish? Which direction and why? So, you know, it just doesn't take very long at all. Short, sweet, quick, and in a hurry. All right, so didn't get any kind of feedback. Still don't know if the audio is good. A little bit of something from somebody, right? I don't want to sit here and run this thing for 30 minutes just to find out there wasn't audio or video. No? Yeah? All right, let's get an audio check and we'll get this thing started off. Hey, Terry, thank you. I appreciate that very much. All right, the COT report. So every Tuesday afternoon, when the market closes, the government mandates that the different institutions out there have to put out a report. Now, there's a couple ways they can game the system, right? They can wait until Wednesday to do any of their big trades or to really change their positions up, but they're so big, it takes them months to really rearrange their positions. So while they can game the system a little bit, when it comes to the COT report, we just follow it on that week-to-week basis. All right, so on Tuesdays, the information comes out. On Friday afternoons, after the market closes, the government publishes that report. So they aggregate all the data on Tuesday, and then they publish it for us on Friday. On the weekends, that's when I like to come in and look through the report and kind of get an idea of where the street money's going. All right. So there's two different S&P 500s in here. If you're not a futures trader, this won't make sense. Just think of it as SPY, right? And in SPY, even though it's not exactly the same, think of it like, you have the S&P 100 and you have the S&P 500. They're both the S&P, but there's variations. Well, these two S&P 500s, one of them is using what they call a full contract, and the other one's using the mini. The mini is the $50 contract. It's the most common used and common watched S&P futures product for retail traders. So we're going to focus on this one. Just open it up in a new tab. We'll come on in here and take a look. All right, so we really don't want to focus on the dealer or the intermediary, this top one. That's the sell side of the market. That's really not our concern. We don't need to, you know, put our effort into that one. The next one in line is asset managers. Now think of the asset managers like oh, they're your pension funds or your mutual funds, say insurance companies, things like that. These people, the asset managers, these institutional funds, these guys go long. They really don't go short. They won't make money to the short side. They don't trade that way. So their positions are always long, and the most that they'll do is like go flat or attempt to flatten their positions. So they're always long, but when we come in here, we want to see, did they try to hedge that long? Did they try to did they take some hedge off? Did they take some profit off? And that kind of gives us an idea of where they're going. Below them are the leveraged funds. Now these guys are like your CTAs or your hedge funds. They'll go long, they'll go short, they'll run arbitrage, they'll run it any which way they can go, and they're way more responsive to more immediate things. Like think about this whole thing with China right now with Evergrande. It just kind of popped up into the scene a few weeks ago. These guys would be all over it. They would be changing their positions and trying to capitalize on that kind of an event. Whereas the asset managers would just keep on trucking and just keep on doing what they're doing. All right. So those are the two that we're really going to focus on. We can look at the numbers and get an idea a little bit, right? Usually I get the calculator out when I do this on my own, and I run the formula to see how heavy they are to the long or the down. Of course, we know asset managers, they're not short, but I'd run that spread, and then I would look at what it was last week and see how much their spread increased. But since we're running this live, we're just going to scroll down and kind of look at it on a graph because it gets the point across, right? So we can come in and we're going to look at this blue one here and just kind of zoom in a little bit. Notice that their position really did not change all that much. And what we're looking at is from this dot to that dot. So they went from 863.5 to 856 flat. Right? That's all they did, just a little bit, not very much. And yet last week, for an example, they really changed quite a bit of their position. We can see they're still long, right? Because they're always either long or flat. They're still long, and they're decreasing their position off these highs. There was a lot of angst in the market because of the Fed. They were going to do their discussion on taper or not, and they really just took a lot off the table. And then this week, yeah, not so much. We didn't really get a change, and that's okay. So they're basically just holding their long. Let's just roll up a little bit and say that again while we're looking at these numbers. They decreased their long, and yet they went long. They bought some here, but they bought more shorts than they opened more shorts than they opened longs. Right? So how did they decrease their position? They increased their shorts more than they increased their longs. So they didn't take position off per se, right? They didn't get rid of their longs. They just increased their short side. All right, so let's scroll back down here and we'll look at leveraged money. Now, when it comes to the world of institutions and trying to separate these two groups, think of leveraged money as the more behavioral, impulsive, reactionary kind of street money. Whereas the other group, the asset managers, they're like your more refined, laid back, stodgy, kind of just toe in the line kind of institutions. Now notice they're in the negative here, the leveraged money. So it shows that this went up. Here was last week's, and here is this week's. But they're still negative. They're still short the S&P. They're decreasing that position to get to flat, but they didn't really try all that hard, and they're still in the negative. They're still short the S&P 500. It's something to think about. And as you can see, they've been short. We'll just kind of stretch this out a little bit. Here's 2021. They've been short all year long. Got to ponder on that a little bit, right? Like, what the heck? You guys have been short all year? Yep. Okay, so that's the S&P. So let's jump over now and we'll look at the NASDAQ 100. And again, it's the same groups of people, or the same groups of institutions, asset managers and leveraged funds. The positions are, a wee bit smaller. In the ES, there was over 1 million contracts, and here we're looking at 74,000, right? So much, much smaller position. So when we scroll down, we want to differentiate who we're looking at here. We're going to go to the leveraged money. It's still in blue. Kind of zoom in a little bit. Notice their position, although they are long, they're not long by very much, and they just barely increased their position, just hardly any at all. And when we go up here and we look, they went more long. They added some longs and they added some shorts. Well, they added more longs than they did shorts, so they fractionally increased their position. Leveraged funds, on the other hand, these guys are still short in the NASDAQ. They're better off than they were a few weeks ago. And you can see that this week they significantly increased their position to get closer to flat. They are still flat, right? They're not flat. They are still short. But they really took a step this week to get not short. So they're working on it. It's hard for the institutions to move around that size of position. All right, so they took a lot off the table. They significantly decreased their position. When I see a move like that, I always want to come back up and look at the numbers again, because I want to know, well, how did they decrease their position? Did they add some longs? Did they take some longs off? Did they add some shorts? What did we got going on here? So they decreased some of their long side, and yet they significantly decreased their short side, right? 3 times as much they took off in the shorts. Now, to me, it's always a little weird to see it this way, right? Because if you try to game out the money, it really just doesn't seem like it makes much sense. But the numbers are the numbers. We can see they took 7.1 off the long side and 21.9, almost 22 off on the short. Net, they're still short the NASDAQ, but they're getting closer to zero. That big move in Bitcoin won't be here because this report came out Tuesday, so we're not even going to hit that. We're going to jump over using the legacy because we get a lot more choices here. That way we can scroll down and check the bonds and the VIX. On a day-to-day and a week-to-week basis, whether I'm day trading or I'm swing trading, I'm constantly watching the bonds, the dollar, and the VIX. And when I'm seeing the S&P or the QQQ moving around, a lot of times when I'm trying to answer the question, why is that moving? It's frequently because it's reacting to the dollar or it's reacting to the bonds. So on a week-to-week basis, I want to come in and look at this and get an understanding of where the money is at. So we're going to turn off the non-report and we're going to turn off the non-commercial. And this doesn't have the same grouping of people, right? So the groups are a little different, but it'll do. They're still positive, and they increased their position from last week to this week. I'd say by a fair amount, right? And you got to remember, they spent 2 weeks decreasing, but we had that whole Fed thing coming out, so they The Fed came out, they talked about the taper, and they kind of rubber stamped the idea that we won't see an interest rate hike for at least a year. So that kind of put everybody in a better mood. So that covers the bonds. Back out of these. Check the VIX futures. These are the VIX that I watch most often. I mean, you can watch the 9-day, the 3-month, the 6-month, and you can just watch like the VIX. You could watch the volatility of the VIX with the VVIX, but this is my go-to on a day-to-day basis. I'm constantly watching the VIX futures. Let's scroll down and get the chart perspective. You can see that they took quite a bit of money out of the system here on the VIX. And of course, you know, they're going to put that money to work. They're not just going to go to cash. But it's a good size move. When you're trying to gauge how big of a move this is, just kind of look back at the other moves. You know, look at how it moved, say, between mid-May and the first week of June or July. You know, we just really a lot of indecisions, a whole lot of nothing, and then they really started bidding this thing up. Well, now they're flipping it back over again, right? And that bodes well, you know, for the coming weeks at least. Like I said, we're not going to bother with Bitcoin this week. Normally I would, but with that whole thing going on in China, where they made it illegal purchases with Bitcoin, and the big tumble, I think it would be kind of retro now to go and look at it. All right. So let's look at the numbers here a little bit. This is the US dollar. Increase in changes. Let's roll down, and I've already turned everything else off. So you can see they're still short, and they increased that short a little bit. Here is the amount of longs, so we can maybe better understand it a little bit. Now we want the non-commercial turned off. So there's the commercial with the short side. And you got to think about, now when I do my COT report, not my COT, but my morning briefing, we look at the dollar all the time. And I always make the statement that when the dollar is moving, we can't just assume that it's good or bad. There was a lot of activity in the dollar earlier this year where Chinese investors felt like they were in a dangerous environment. So they took their dollar and they came over and they bought our dollar, and then they put that money into the market. So our dollar went up because they were buying our dollar, but they were using our dollars to buy our stocks. So seeing the dollar go up was a good thing. But there's also other times when the world gets kind of hesitant or fearful, and they think, you know, things are looking kind of scary out there, and they want to find a quote safer place to put their money. In those kind of situations, they'll buy our dollar because, well, our dollar is better than their dollar. Our junk is better than their junk. So when we see that dollar move, we can't always just think that it's good or that it's bad. We got to kind of try to ask, like, well, why is the dollar moving? Because it may be moving for a good reason. It may be moving for a bad reason. What we can say right for sure, for a fact, is that they're still net short. That's not doubt or confusion or ambiguity at all. They increased the size of their short position. Still, that we can say that. So guys, that's the COT report for the week. That's usually the markets that I hit, that I find value in. Overall, when we aggregate back, you can go back and watch this video. We want to look at what was their net positions in the NASDAQ, what was their net positions in the S&P. Were they increasing those positions or decreasing them, to kind of have an idea of where they're going to be going next week. Now, if you go to tradingstir.com It's free. You don't have to be logged in to do anything. You can come over here and you can look up all kinds of stuff that you may be interested in. Emerging markets, you can hit the Russell or whatever. Have at it. I just want to keep the videos short and sweet. We hit the typical indexes and we shut her down. So that's it, guys. Enjoy the rest of your weekend, and I will see all of you tomorrow at the Bullish Bears in the live streamer.